that we saw this morning, and in light of wanting to keep my mantle as being the world's most boring day trader, being discerning about the setups we take, being patient about what boxes we want to be able to check before we take a trade. The Dow is a great example of a late in the session trade that had just about every single tool that we like to use for a day trade lining up. So let's go through that. And it's really easy. And I think the best way to start any trade is from the top down, from the bottom up. And when I mean bottom up, I mean I'm going to start with structure. What is the trend or lack of, right? Is it an up, down, or neutral trend? We kind of refer to these as yellow trends because the multi-chart is yellow on the lower row. That lets us know we're likely going to be fading. Now, fading is buying into weakness in a neutral market at support. That's it. That's all that means. We get down to a whole host of V-score buy signals in a neutral market. And then additionally, we got to use some volatility levels. This is the hourly price movement range acting as support. And then we also had our price pattern in here as well. And that's really it. Now, the only thing I could, if I want to gripe about anything about this setup is that it was happening so close to the cutoff at 11:30, but it was still a valid time to be trading. For the most part, when I do not have the structure of bonds and equities moving preferably together, I'm pretty open to a 10:30 cutoff. And for those of you wondering, okay, Rog, when do you choose to cut the trading new trades, right, off at 10:35 versus 11:30? And a lot of that is going to be whether or not risk appetite and risk aversion is clear, whether or not we're seeing a nice synergy between bonds and even between S&P, NASDAQ, and Dow. The best type of days are when risk appetite is broad, meaning all stocks, Dow stocks, S&P stocks, NASDAQ stocks are bullish or bearish. So that synergy is helpful. So when I lack that synergy, and if by 10:35 things don't look synergistic, I can say, you know what, I don't have an edge and move on. And that was pretty much my call, except for right before we wrapped up the morning session in the Simpler Futures room and in the Sector Secrets Master here, we got this set up. And every single thing, including the slow stochastic setting up. So I had a price-based indicator, volume, volatility, and then the pattern all forming. And that's it. That's boring day trading. And boring day trading is boring because you need so many things. You want so many things to be in a line. And remember, there's 4 factors at work here, always in our trading. Time, which wasn't really an asset here because I was running out of it as we got closer and closer to 11:30. Volume, which was perfect. Neutral environment, and then finally volatility. So time, volume, price, right, and volatility. When we can check all of those boxes, we had 3 out of 4 here, you've got a perfect boring day trade. That's what we're looking to rinse and repeat. And that's what happened on the Dow here today. Now, it wasn't just the Dow, because some of you might remember, as you're watching this, we had a NASDAQ trade as well. And the NASDAQ was a different setup. It was a short setup. And it took a little while for that NASDAQ to follow through. But it's the same idea. How many of those factors can we put together in this area, which is where that short started to form, right, in order to take advantage of the movement lower? So think about that. Boring simply means I'm slowing things down. I'm needing, hopefully, not just 2 reasons, but maybe 2 and 3 and 4 reasons across those factors, time, price, volume, volatility, to line up. And when that happens, I'm just playing probabilities, gang. That's really it. I'm just playing probability. And you might say, okay, Rog, when the Dow sunk into that zone around the same time, did the NASDAQ do the same thing? The NASDAQ was a no, because you see this here? This was not a neutral market. This was not a market where I'm going to buy arguably what we could call an oversold support zone. Because even though it bounced a little bit, look how much less it bounced than the Dow. That's structure working for the Dow and against the NASDAQ. Okay? So that's the contrast between you have a neutral environment and all those things line up. Look at the follow through. And that's really, gang, the trade setup is what gets us in, but it's follow through that pays us, right? So that's why probabilistic trading is about what's the likelihood for follow through. Hope that makes sense.
Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.